What is going on, you guys, over here in the buyer beater community? I got some great news for a Monday. This deal is on market. We'll be able to go over all the addresses and all that fun stuff. But right now, I at least wanted to break down a dead wholesale deal turned into a phenomenal buyer beater novation and how much these wholesalers are going to get that are in the community. So quick shout out to Tyler and Drake. Amazing for them to be able to come over with something like this. I'm going to go over the numbers. I know we got a lot of new faces that are in the community. So that way you guys saw me speak a little bit and you're like, damn, what does this mean? Well, let's go over a live analysis on a real deal so you can exactly see how to transition those dead opportunities into buyer beater novations. Okay, so I broke down initially our wholesale formula, beating a dead horse with this. Let's go over it. Okay, so we have our after repair value times about 0.70 or 70% of what the property could be potentially worth, minus our renovation, minus what you want to make, equals that max allowable offer. All right, so for these numbers, this was in Atlanta, Georgia. The ARV was about $275,000. We have it on market for about $275. We have it on market for $279. Fingers crossed, we got some great traction. Times about 0.70, so 70% of what it could be worth. Minus, we initially thought about $60,000, but it's looking like we put about a little over $75,000, like $75,400 something. You know, fridges, appliances, full gut job. I mean, we'll go over on the before and after photos. You guys are gonna be like, that was wild. Minus, they wanted to make $15,000 equals a good $102,000 for the seller. Our max allowable offer for this wholesale opportunity for that seller was about 102 grand. Now, to break down these numbers right now, I'll tell you, they built great rapport with the seller, like most of you do. You guys end up being able to talk with the seller, you guys laugh, and you guys really get to know each other and their situation. Unfortunately, they were about $18,000 lower than what the seller wanted. So the seller really wanted $120,000. Kind of wasn't really entertaining anything less because they felt as if it could go for more, but they didn't think the extent, the renovations were as extensive as they were. So, seller asking $120,000. The end investor that they had, they said, you know what? Let's at least see what we can shop this out for. So they started looking around, started going to their buyers. Their dispo cat was going around, and they found out that they could only find somebody who was going to take this on, front end closing costs, obviously coming in 20% down, hard money, so interest only payments, all that fun stuff. They came in at about $105K. What does that mean? That means they would have made about $3,000, right? So they could probably assign it if everything goes well for $3 grand and not make anywhere close to what they wanted to make. So when we came into this, we ran our numbers. All right, remember, this is kind of our formula of what we end up doing. So coming into it, we knew, all right, well, we could probably sell this for $275,000. We're not at 0.7. We're about 0.83, okay? So looking into this, we're going to be at 275K times 0.83 minus our rehab of 75K minus nothing else. You know why? Because we're not baking in a fee because we're force appreciating these homes. So we get to equal what our max allowable offer is. And so on these numbers, after we did everything, we kind of came to realize that we were well above the 120 approach for this seller. So we came in and we said, you know what? Do the warm handoff. Tyler and Drake said, hey, you know what? Mrs. Seller, unfortunately, that's outside of my buy box, but I do partner with a creative financing company that can guarantee you $120,000, the price that you want, if you'd be open to terms. What are your terms? Great question. That's why they threw it directly over to our acquisitions department and they locked it up. We got that for $120,000, and I'll tell you right now, we did put about $75,000 into that home. And if we're able to go over what this basically means, our end goal right here after realtor fees and closing costs, which I'll factor that in, is $60,750 of projected net profit. So you guys, you're telling me that we just put in $75,000 of our money. This is our money. Remember that. If you all these wholesalers, fix and flippers, agents that are in the community right now, you don't fund anything. If it's a great deal that buyer beater wants to take on, we fund the entire renovation. Our whole slogan is, you find it, we funded. So when they came into this, they were stoked. They're like, okay, we give the seller exactly what they want. Buyer beater comes in. We had our project manager come out. We identified our scope of work. He's been working diligently with our contractor, transformed that entire property. We did all that. We put a pulse on that entire property. We drove this whole deal home. The wholesaler just got to fire and forget. We gave them great news saying, hey, we're closing this bad boy out soon. It's on market. They got to see exactly what the transformation was. So we're going to make $60,750 roughly. Now, remember, at $275, that's what we feel as if we could sell for. What do we have for on-market costs, right? Because it's not just everything above 120. Obviously, buyer beater is going to be responsible for the realtor fees and the closing costs associated with this home, which actually turned out to be $19,250K. So our realtor fees and closing costs, $19,250. All right, so we have to minus this cost, right? So we go, okay, we factor that in. It's completely fine. We also have to minus what we put into the home. We want to get our money back, duh. So we minus another $75,000, okay? And then what we have left over is, I think it's actually an even, let's do some math real quick. We're doing this on the fly. We got $275,000 minus $19,250 minus the $75,000. We're left with $180,750, which is exactly where this comes in. Because if we're left with 180 minus 750 minus the 120 that they want owed, we're left with 60,750. Look at that. We are left with 4 times what that assignment fee would have been. And we gave the seller exactly what they want and we funded everything. So how it works when you guys bring us these opportunities is you find it, we take it to the finish line. We fund it, we project manage it, we attach our agents, we do the insurance, we do the liability behind it, we do everything in regards to getting these properties moved. We just want to come in front of the opportunities from your dead deals. And I know you guys have a lot of these opportunities in your CRM because if you're just $30,000, $50,000, $60,000 higher, or I'm sorry, lower than what the seller wants, you just have to revisit those leads, identify if it's something that would make sense, submit it via the Podio, and get it moved and be attached to this equity. Because these people at $60,750, they get to receive 0.25. They receive 25% of what our overall costs are going to be. All right. Now, we do have things factored into this. And let me be completely transparent, right? We're taking on the liability of this, and these deals can last months. You got to think, wholesale, 30 days or less. Boom. Novations are not that. Novations usually end up stemming between 90 and 120 days. Why? Renovations, scope of works, finding the right agent, finding the right contractor, getting things grounded in order to be able to start understanding the momentum of that area. We have to come in and take on that risk on behalf of you, but that's what we do. That's our job. So we do factor in on this. We take 25% off the top because we have our agent outreach coordinator, we have our entire acquisitions department, we have our project manager. Everybody who has the deal run is going to get paid out on initial what we have before anybody else gets paid, before I get paid, before my partner gets paid, before our entire overhead is paid, and before you end up getting a position of that as well. Now, I think that's completely fair. If we still break down this number, 75% left of this number is $45,562. Boom. $45,562. I love how my handwriting is so good and it just starts getting more and more progressively sloppy, but you guys are sticking with me. I love it. So $45,562 is projected what's going to be left over at close of sale. And of course, we'll continue to follow along this journey. This is one of 17 active that we have right now. This wholesaler will make 25% of that number. So 25% of that number, remember, we take 75% at the end for the liability and everything that we end up doing because the entire headache is on us. That wholesaler is left with $11,390K. They literally barely made a little bit less than this by doing nothing. No offense. You just identified an opportunity, did a warm handoff directly to our team, and we tackled all of this. And in 94 days, roughly, that's projected when our close is going to be, from the time that deal was found, they're going to make just about exactly what they wanted to make. Gave the seller $18,000 more, and that seller is stoked. She got to see the entire transformation of a really rundown home into a beautiful turnkey property. And I'll give the address down below so that way you guys can look at the listing, of course. And it is just phenomenal. So the before and after photos are crazy. I just wanted to be able to do a quick shout out on a good Monday for a little bit of a buyer beater breakdown so you can see how these opportunities kind of come out of the woodwork for everybody and their business. So I hope you guys followed along. If you have any questions, bring them up on this Wednesday's call. We're going to do a lot more market analysis, and I look forward to having your submissions right down below. And remember, if a deal doesn't work, it's not going to work. But we don't just kick it back to you. We tell you exactly why it doesn't work so we can sharpen your skills and sharpen the craft so you can identify these creative solutions. So I appreciate it. Happy Monday, guys. Let's